But first, to join us from the TSX to talk about the stock market tug-of-war we're seeing on both sides of the border is Diana Avigdor. She's Portfolio Manager and Head of Trading at Barometer Capital. Diana, great to have you with us again.
Thank you.
So I was asking, or I guess I was making a statement, but you tell me if it's true or not. Is there some sort of normalcy that seems to be, or stability that is coming back into the market, or is it too soon to say that right now?
It feels like a tired quiet before the storm, quite frankly. This morning was one of the quietest openings I've seen in a little while, and especially in light of what's been going on last week. If you were away for last week, then it may feel like nothing happened, but so much has happened last week and so much volatility that there are some events that we're waiting for this week, and I think that after last week and after last week's positioning, I think traders are happy to use this week's upcoming events as an excuse to wait and see and see what's going on. We've had huge volumes last week, and we had some confirmation of certain sectors like the high yield sector as being good. So people are watching.
Okay, well, let me ask you, I mean, it seems to me, and you know this better than I would, but there's days when bad news is bad news and some days when bad news is good news. We got some not so great economic indicators on the Empire Manufacturing Survey. Japan's numbers, though, were seen as I guess a bad news is good news story. Is that how you're reading things right now? Are markets grasping for some good news?
Well, excuse me. The GDP out of Japan was a little bit better, and with the FX, with the currency at another high, in other words, it's strong, and there's some intervention talk in the currency markets because it's lower than the August 4th intervention in Japan. So that's taking some of the gold markets higher as intervention in the safety currencies such as the Swissy and the yen are in the forefront of people's minds. Safety money is flowing into the gold.
Let me ask you as well. I've heard from some people too that I've heard about the Greenspan put that was out there years ago, but maybe policy isn't going to have the same impact on markets anymore because they just don't have much left to do, quite frankly. What would happen if markets just started trading on dividends and earnings, just basic valuation stuff?
It would be wonderful. It would be wonderful, and we've seen the TSX rally and the telecoms do quite well. And we've seen in the beginning of the week, as people were looking for to take profits, the REITs were sold down really badly, and then towards the end of the week, they really rallied hard as people realized that it's best to stay with the sectors that are working, and with rates staying low for a longer period of time, and it's a more confirmed low rate than the yield sector. The yield play is becoming that much more attractive. And in addition, we spoke, I think you and I spoke about correlation, stock correlation, equity correlations before. Equity correlations is the correlation between stocks. So it's saying all stocks are acting almost the same way. In the U.S., it's at the 1 month realized correlations are at a 10-year high. What that means is that the market's going all up or all down. People are buying ETFs or selling ETFs, and that's proving to you that people are trading on the macro, not on the single stock level. So the fear, and it's a major indicator of fear when you have people selling equities just because it's a risk asset without any fundamental call.
Can you give me any sense then? Are some people trying to take advantage of this? Are you seeing any smart money come in the market or hearing anything where long investors are starting to buy in?
I think that is why it's so quiet today. I think people are looking and, they're looking at stocks and saying, well, I could have bought it at this price last week, so I'm not going to chase it here. Unfortunately, I think that people are searching for liquidity to sell stuff that they have not had a chance to sell last week, or that it was at ridiculously low level. There were other factors at play with a big volatility last week. There was it was higher average volume in the U.S. than when Lehman declared bankruptcy, and a lot of talk around the high frequency and little mini flash crashes, 10 minutes here and 10 minutes there, where lots of volume was going through and not necessarily fundamental money.
We're probably going to hear over the next few weeks, and I'm going to be talking to some people who are going to say the next probably 6 months, lots of news about the European situation. And it's just going to be little by little, we'll hear more what's going on. Any sense of how that might affect things and how skittish people are right now?
You know, the euro is holding up pretty well. The last 3 days has actually rallied. So I think that tomorrow we're watching for Merkel and Sarkozy meet. Expectations are really being managed as to not to expect much, but this is part of the reason why the market's on hold. Just want to make sure that we're not being thrown a curveball, so we're just sitting tight and see if anything good comes out of it. In addition, the market's waiting for the end of this month on the 26th, Bernanke and Jackson Hole, so that's when QE2 was born almost a year ago, so we're hoping, market's hoping for maybe another policy bullet to help out. But this week, if we see some positive economic data, I think we'll be fine. However, markets have really sold off, and it is not unexpected that they would rally, and the ranges have been huge, and we really haven't broken on the upside any technicals, positive technicals. The curves are still downward trending. We need to do a lot of market work in order to actually say we're in a very good situation. So for now, I think you stick to yield and you're very careful with your trades and nimble.
It sounds like that's what exactly a lot of people are doing, are just being careful. Diana, it's always great talking to you.
Thank you.
Diana Avigdor joining us, portfolio manager and head of trading at Barometer Capital. She joined us from the TSX.